When you say that Standard Charter bought, you're saying they bought commitments from a mining producer?
Yes, and refiners.
Oh, okay, got it. I was on a podcast yesterday with the CEO of Silver Tiger. I don't know if you're familiar. It's a junior exploration. They're developing a
I don't know it. Yeah.
yeah, they're developing a big silver project down in Mexico, and I think they might have Peru properties also. But he said that based on all the analysis he's seen, there's going to be a silver supply deficit starting next year, like a big one. And he brought up the point that it's not just like, well, you can't even even with oil pumps, you can't just shut them down and then turn them on right away. But with supply, physical supply of physical gold and silver, it takes at least 10 years to develop a mine. So it's not like if you've got a supply deficit and the demand is growing. And with silver, obviously, as you point out, what makes it more interesting than gold is that it's got the industrial demand component. I mean, the economy doesn't operate without silver, right? Or it doesn't operate as efficiently or as well without supplies of silver readily accessible by you know auto producers, technology manufacturers, the whole thing. So defense companies. I mean, I've been kind of thinking at some point down the road, if the supply of silver becomes scarce enough, you could well see, like the U.S. Department of Defense declare it a strategic metal because they need it for their weapon systems. So, and so he was saying, he thinks you're going to see for the next 10 years a supply deficit. And, I think 10 years is kind of that kind of thing because who knows for sure. It could be longer, could be shorter. I don't know. I mean, if you go into a big global depression, it's going to reduce the demand for silver. Not the investment demand per se, but certainly the industrial demand component. And another big trend that we think is going to emerge is that you're going to start to see companies. They're not going to be. It's not going to be as easy to source silver in London and the Comex and the CME. They acknowledge they're not a true physical market. um, and you start to see a lot of industrial users go directly to the miners to lock in supply. And I think that's happening now to some extent. I know. I mean, we know it is with gold, right? The banks have supply contracts with Barrick and Newmont.
Yeah, that's so interesting because silver it has always been the Achilles heel, hasn't it? And
Yeah.
for the paper guys, and this is, I think, one of the reasons I and many people and like Chris and everyone that's Andy, we're all kind of focusing on the silver market because it not only is it probably the best investment relative to anything else on the planet right now, um, and so undervalued. And after what 50 years of paper dilution, but it also is it, as you say, it has an industrial element to it as well. Now, if we've got if we've got supply being eaten up by the investment guys, by the Standard Charter, for example, just one bank. I mean, and of course that they're not the only ones, of course. They're never going to sell a single ounce. Not a single ounce will ever come out. And obviously, that's not what they're buying it for. They're buying it knowing that the price of silver should be 50, 60, 70, 100, whatever. They know that. And I think, but what happens, I guess the question is, and I think Ted Butler's raised this years and years ago, is that, well, hey, what happens when Nokia or what happens when Samsung or these guys suddenly want just in time? They're on a just in time supply, right? So, these wholesale bars, and one thing that the banks have been really good at is making sure they never ever missed a delivery. Otherwise, these guys would just shut down an assembly line. They'd be out and they'd literally buy so much silver, it would spike the market. So it's interesting that, and then when we were in our vault a couple of weeks ago, I picked up a 1,000 ounce bar and it was said to me, Hank, do you realize that 1,000 ounce bar will make 600 electric vehicles? I think, oh, it never occurred to me actually before. And how many tens of thousands of electric vehicles are coming up? where's this supply going to come from and at what price?
Well, I mean, ultimately, price regulates scarcity, right? So at some point, we're going to see much higher. I think higher prices, especially for silver, than most people can imagine is possible right now. Because how else are you going to regulate the supply and demand of silver?
True, and I think that again another thing is I've noticed that is that a lot of big money is buying. You mentioned coins. I don't really focus on the gold coin side of things, but what blew my mind is how many big investors are saying, okay, yeah, I can get £1,000. Yeah, you can give me 1,000 ounce bars cheaper. I want 1 ounce coins, and literally we're talking pallets and pallets of 1 ounce silver coins because. Why? Because a 1 ounce silver coin is something you can spend.
Fungibility, exactly.
And are you seeing that? Are you in the silver market as well as the gold market, or what do you see?
Well, I mean, basically the same thing everyone else is. I haven't personally bought silver since it was under 20 bucks a couple years ago, I guess. But it's funny because I was just last week I was saying to myself, I probably should start buying some more physical silver because it's going to start getting more scarce and the premiums are going to go a lot higher. One of the theories that I have, I mean, I've never heard anyone else really talk about it, is that you hear about how all of a sudden these mints have shortages, right? Well, there's not a shortage of silver out there. I mean, why can't whoever supplies the mint, why can't they just take delivery off the COMEX, load the bars out, and refine them into the blanks that they use to make coins? So it's not like there's a shortage of silver that can't be, it's silver so short it can't be supplied to the mints. What I think happens is that when you see these shortages, and we saw them, in March, April, and the summer of 2020 as well, and we know that I think the LBMA was like, he would know more about it than me, but I mean, was within a hair of defaulting back then, and that's when they conjured up this ACE contract. But I think that one of the signs that you're seeing when there's a shortage in the wholesale market for the big boy buyers, I think what they do is they divert supply that might otherwise go to the U.S. Mint, the Canadian Mint, the Perth Mint, because they need that supply to avoid defaulting into big boy buyers. Because, as you said, the banks have been very careful not to default because the minute a bank defaults, everyone's going to know about it, and you're going to see gold and silver futures go limit up. And they'll shut it down for the day, and the next day they're going to go limit up. Because at that instant, everyone out there is going to realize that everything that people like us have been saying for the last 20 years about the manipulation scheme and about the supply and demand dynamics is true. It's going to be one of those slowly, the Hemingway slowly, then all at once dynamics. And that's why they're careful about not defaulting. And I think that's also why you see from time to time these mints say, we can't produce anymore right now, because they're diverting that supply that would otherwise go into the retail distribution system so that the banks can supply the big boys.
Yeah, bang on. And as you say, there's so many ways of stopping this supply hitting where the rubber meets the road. For example, over the years, and especially in the last 2 or 3 years, if we want to buy a large amount of silver, and we know UBS has got some silver, or JP Morgan's got some silver, and we can get some, but if we start to place too large an order, a red flag pops up, and you get warned, you do this, we'll cut you off. You will not get another ounce. And this has happened multiple times. So what we do is we obviously spread those orders amongst different banks. And but even if you go to a refiner, one of those banks, Standard Chartered probably in many cases, but in one of those banks also have the gold accounts or the silver account, the bank account for the refiner. and or the producer. So you even try and get around that system, and they go, hold on a minute, this is all going to one supplier. Now, I've gone to the LBMA, this was 10 years ago. I remember going public on this, and I said, right, supply me 1 million ounces of silver. I was challenged to do it. And so I said, I went to the LBMA, and I spoke to Simon Weeks, the LBMA, and I said, I want 1 million ounces of silver. Who are you? Where's your balance sheet? I want to see who you are. No, hang on a minute. I've already bought the spot. I want to convert it. No, we're not selling this to you at all. Hang on a minute. You're an LBMA. You've just set the fix in the LBMA, and I've just come to you at the fix and said, I have the spot price. I'll pay a premium. No, we're not selling it to you. You've got to get, I want all your balance sheets. I want all your history. I want everything about you. Come on. So yes, they do control it. And if we do too large an order, even the second tier banks that we go to in Europe, they say, hang on, don't, we can't take that order because we will be red flagged ourselves, and they'll cut us off. And so UBS particularly manage the amount that you can even buy yourself. And you have to be very sneaky to get it yourself.